How about that, Mike Wirth? Do you want to talk a little Chevron with the man himself?
Yeah,
Let's bring him in.
Mike's done a remarkable
Shall
job.
we do that? Going to be in the job for longer, perhaps, than had been originally anticipated. Chevron is out with the second quarter highlights, although not full earnings, but it did report overall earnings, $6 billion, record oil production in the Permian Basin during the quarter. The preview of those results did coincide with the announced retirement of its longtime CFO. And it did waive the mandatory retirement age for its CEO. Joining us now in a CNBC exclusive is Mike Wirth, Chevron's chairman and CEO. Mike, good to have you. And will be good to have you joining us for many years in the future as well. So what do those years hold? You know, what is it that when you look ahead and you say, hey, I'm glad I've gotten a few more years from this board of directors to continue to lead this company on its current trajectory? What does that trajectory look like?
Well, David and Jim, it's good to be with you. We've got good business momentum, and we're delivering strong results in what's been a turbulent world. You go back to the pandemic and oil prices below zero, the war and prices above $100. We've acquired 3 companies over the last 3 years, and we still have the constant discussion about climate and ESG. So it's a challenging environment. We've made tremendous progress. We just announced a very strong second quarter, and I'm excited to continue to lead our company to deliver higher returns for our shareholders and a lower carbon energy system for the world.
Yeah, when it comes to challenges, and again, the years ahead that you now have as CEO, sort of how do you see it, Mike? What is your biggest, perhaps, challenge, so to speak?
Well, we have to meet this great challenge, which is a world that's growing, that demands more energy, and wants to see that energy with a lower carbon footprint coming with it. We can't change the system overnight. We've got what we've got, and it's growing. So we have to reduce the impact of the energy that the world uses today, and at the same time build these new energy systems that can grow and help create a different energy system into the future. So we're decarbonizing our oil and gas business, reducing the carbon intensity of every barrel that we move through our system, and at the same time investing in carbon capture and storage, hydrogen, renewable fuels, and other technologies that we want to scale and make them a bigger part of the system in the future, as we need all solutions to meet this challenge.
Mike, there are a lot of people who feel that one day we will run out of, in this country, of the ability to be able to replace our energy. Obviously, in the 2000 period, we were, it looked like a disaster with fossil fuels, and then because of shale, we became something big. Now, you recently said 100% reserve replacement is a number that you ought to expect to see, that or greater over time. What that tells me is you think that we're not running out of oil anytime soon.
80% of the energy system today globally are fossil fuels, oil, gas, and coal. 20 years ago, that number was about 84%. You can't move this number quickly. And so we need to reinvest in the energy that the world uses today. We should want responsible producers to do that and to do more of that. Companies that are committed to safety, to protecting the environment, to reducing emissions. We are one of those companies, and we intend to replace our reserves through production, through technology, through business acquisitions, and we intend to grow our oil and gas business at the same time as we grow these new energy businesses.
All right, Mike, you've become very much the spokesperson for an industry in a way that I haven't seen, frankly, since John D. Rockefeller. And one of the things that intrigues me is that we'll see articles about how Russia is now producing at a certain level. And we were supposed to starve Russia. It clearly failed in any effort to do that. When the president brings you in, what does he ask you about the notion of what's going to happen with Russian production and the war in Ukraine?
Well, Jim, we have discussions with a number of people in the administration. I've not actually had that conversation with the president, but we talk about the realities of the energy system. We talk about the importance of American energy and the tremendous resource base in this country that can be developed by American companies in a way that's responsible, that helps support our economy with affordable and reliable energy, that allows us to export energy to our allies, especially allies that are in particular need, as we've seen with Europe here recently. We can do this for many decades to come as we invest in these other energy products as well. And so the discussion we have with the administration is really about how do we do both? How do we find balance in the conversation so that we don't focus so much on just one aspect of the equation, be it affordability, reliability, or the environment, that we lose the plot on the others. And so we need to keep all three of those in sight and as part of the dialogue as we talk about policy, as we talk about how companies invest.
Wow. Okay, I'm glad that they do that. That's much more thoughtful than I thought. Now, you yourself have recently diversified away from the Permian, although there is some Permian in this acquisition that you did for PDC Energy. Are you yourself beginning to believe that the Permian's become too expensive and that maybe it's better places to look around the country for better oil?
First of all, no, the Permian has not become too expensive. It is the best place for us to be investing our dollars. It's the largest single destination for investment, and we just finished a tremendous quarter. We produced more oil out of the Permian Basin in the last quarter than we ever have in our history. It's up 10% over the same quarter last year, over 770,000 barrels a day. Our well performance is on track. We're going to grow this to over 1 million barrels a day by the middle of this decade and then hold it flat at least out through 2040. We're continuing to find capital efficiency and ways to get more done for every dollar that we spend. So the Permian is a tremendous asset for our company and for our country. Now, we have also increased our exposure to the DJ Basin in Colorado. The PDC acquisition will add 10% to our worldwide reserve base for just 2% of our shares. It adds $1 billion in free cash flow at $70 Brent and makes us a very strong producer in Colorado as well as in Texas, which is, again, good for our company and good for the country. So there are places outside the Permian you can expect to see us invest, absolutely. But it doesn't mean that the Permian is not still a premier asset.